Welcome to the revision session of SRE 2410. Sir, what does 2410 talks about? I say this is not 2410. This is 24I0. I for interim financial information. What is the right age to wear a sari? Sir, 24. So remember this 24I0. 2410 talks about review of interim financial information by the I for independent auditor. I for independent auditor. Now the question of all of you, sir, what is an interim financial information? For example, it could be a quarterly financial statement, it could be a half yearly financial statement, and it can be of two types, complete and condensed. Condensed is just like a summary financial statement. Okay, sir. So it could be a complete set of financial statement like balance sheet, P&L, cash flow statement, notes to accounts, each and everything. Or it could be a condensed statement with balance sheet, P&L and some notes to accounts. Very less disclosures. Okay, sir. What is the objective of the auditor? The objective is to express a conclusion. Whenever you are doing a review, you don't express an opinion. We express a conclusion. Conclusion whether on the basis of review, anything has come to his attention. Which attention? Auditor's attention. Which causes him to believe that the interim financial information is not prepared in all material respects as per the applicable FRF. So whenever you are giving the review, whenever you are doing the review, your conclusion is negatively worded. That means based on the limited procedures performed, no material misstatement has been found. Got it, sir. Now this SRE will be divided in four parts: acceptance and agreements, audit procedures, reporting and miscellaneous. If I talk about agreement, again the agreement wala part remain the same. You cover the objective and scope of review. Now the responsibility of the management, responsibility of the auditor. Management responsibility you link with the applicable FRF. Auditor's responsibility you link with the form of report. Then we discussed about the audit procedures. Let's go one by one. If I talk about the audit procedure, what was the first procedure? Risk assessment procedure. What do you do via risk assessment procedure? Understand the entity and environment, including the internal controls. Yes, sir. How do I understand? Read. The read what? Past year document and the latest document. Come on. Past year document and the latest document. So the first point talks about documents of the last year, which talks about the previous year audits and reviews, plus the corresponding interim period of the previous year. Okay, sir. Also talk about the reading of the most recent audit and review, most recent annual and comparable prior period interim financial information. Sir, what is the most recent comparable prior period interim financial information? That means if you are doing the review of Q3 2024, what could be the recent prior period review information? It could be Q2 2024. So last year and most recent documents you read. Whenever you are reading them, what will you focus on? Sir, we will focus on understanding the significant risk. We will focus on understanding the significant risk. Yani consider any significant risk. What is a significant risk? The examples that we have discussed in SA 315, complex fraud. Complexity of transaction, fraud, related party, outside normal course of business, unusual nature, significant developments and degree of subjectivity. Revise 315 for more details. Got it, sir. Now from this, they have taken an example of fraud. Fraud via management override of control. Now these risks can lead to what? Material misstatement. So the next point says, consider the nature of corrected or uncorrected material misstatements in the prior period financial statement. Now, how to decide whether it is material or not? Consider materiality. So consider the materiality for two things: determining the nature, timing and extent of procedures and evaluating the misstatements. This is the same point we find in all the standards. Okay? So this point is ultra repeated. These 5 points are more than enough. These are more than enough. Just read these points, just focus on these points, and the last points which I have left, these are just for your reading and understanding. Next point is about your audit procedures: inquiry, analytical and other review procedure. In this thing, what do you start with? Please tell me in the chat box. Let's see who all are active. Let's see who all are active. In my audit procedures, what is the first thing that I'm going to do right now? What will I start with reading here? Here also I will start with reading, but what? Minutes. Very, very good. We will start with the reading of the minutes of the meeting. Sir, when you are reading the minutes of the meetings of what? TCWG, shareholders, committees. Plus, for certain meetings, the minutes may not be available. Certain meetings, the minutes may not be available. So, inquire about the matters dealt at such meetings. Now, when I am reading the minutes, now when I am going through the minutes, like in our studies, sometimes we are reading about something, but we remember about our past. We start thinking about our past, the bad things that happen in our past. Does it happen with the auditor also? Yes. While he was reading the minutes, past bad thoughts come to his mind. Sir, what were the past bad thoughts? Matters giving rise to modification. Matters giving rise to modified opinion in the audit or review reports of the previous audit or review. Oh, now to divert his mind. Now to divert his mind, what did he do? He made a call. He made a call to the component का auditor. He made a call to the component का auditor, यानी communicating with the other auditors for reviewing the interim financial information of significant components. Clear? Clear, sir. After this, he made the inquiry with the management. Sir, what types of inquiries? Basic inquiries, inquiries about the changes, inquiries about something new, plus inquiry about the misstatement, whether there is any known uncorrected misstatement. If there is a known uncorrected misstatement, it could be an indicator of fraud. Sir, what are these things? Please explain more. A basic thing means basic inquiry, whether the financial information is prepared and presented as per the FRF, whether there is any change in your accounting policy, any change in the accounting principles or methods, accounting policy or accounting methods. ठीक है sir. Plus, when there is a change in the accounting policy, let's say your operating lease has become financial lease, so way of accounting will change. Got it, sir? Plus, there could be a new transaction which requires a new accounting principle, any new lease, any new financial lease, it will require new lease accounting. Got it, sir? So these are the 3 points you need to consider: basic, change, new. Okay, sir. Then ask the management, tell me honestly, is there any known uncorrected misstatement? Have you left any uncorrected material misstatement? Ask them whether interim financial information contains any known uncorrected misstatement. If they say yes, management is a fraud. So the next few points are about fraud only. Fraud means any fraud which has been done by the people who were protecting the entity. Sir, people who were protecting the entity, yes. Employees who were maintaining the internal control, they are themselves doing the fraud. Or any fraud which has a material effect on interim financial information. Plus any other fraud which has been told by a third party. Sir, third party like any employee, matlab internal or external party, any employee or a former employee or any analyst or regulator, they have communicated the fraud. R for related party. R for related party, yani whether the related party transactions are accounted and disclosed as per the FRF. A for accounting estimates. Here the word is assumptions. Whatever significant assumptions are there regarding the fair value measurement or the disclosure. Fair value measurements or disclosures, they should be properly considered in the financial statement. And last few points were unusual events or complex events. Unusual or complex situation affecting the interim financial information like a business combination. This is not usual, this is unusual. And D for debt covenants. Compliance with the debt covenants, that means the debt terms and condition. 5-6 points are more than enough. Clear? Clear, sir. Other points, just give a read. Now, sir, do we need to do a direct communication with the entire entity's lawyer? The answer is no. It is not compulsory. It is not compulsory to do a direct communication with the entity's lawyer. But if you feel there is a need, if you feel that entity is hiding some financial information which can be obtained only from the entity's lawyer, then in that case, it may be compulsory for you. Is everything till here clear to all of you? Come on. Are these 2 pages clear? Yes, sir. Now comes the next point about subsequent events. Sir, in the case of subsequent events, are we required to do everything of SA 560? No, just one thing, inquire. Inquire about the events requiring adjustment or disclosure in the financial statement. That's all you have to do. Got it, sir. Sir, what about going concern? We made a summary. We made a summary of going concern. Yes, sir. Was that the perfect summary? Yes, that was the perfect summary. That summary covers this part. Also, it covers the reporting part. Let's revise from that only. Chalo, sir. Let's revise from the going concern wala summary. Sir, what was the going concern ka summary? See, whenever you find some events or condition that there is a material uncertainty, that may cast a significant doubt on entity's ability to continue as going concern. What do you need? Sir, we need the management plan and the disclosure. So ask the management about the plan, and those plans should have two qualities. What? It should improve the situation. It should be feasible. Say with me. It should improve the situation. It should be feasible. Now, sir, if the material uncertainty exists, we need proper disclosure. If proper disclosure is given, generally we add a murg para. Generally, though we add a murg para, but in this case, you add a EOM para. Oh, and if the adequate disclosure is not there, modify your report. Modify your conclusion, give a qualified or adverse conclusion. This is the same thing we have covered in essay 570. Clear, everyone? Clear, sir. Awesome. Now, sir, sometimes you may have a doubt about the accounting treatment. What was the example we discussed in this case? Motherson Sumi. In case of Motherson Sumi, what I found? Sir, there was a sale of 8 crores which was not recorded. Oh, what did I do? What did I do in case I found a sale of 8 crore not recorded? Sir, you went to the accounting personnel. I went to the accounting personnel and did some inquiry. And he told me the accounting is done as per the contract. So the second thing I did was inspection of the agreement. Clear? Clear, sir. This is the same thing which is given here. Done? Done, sir. Now, whenever it comes to evaluation of misstatement, just see whatever uncorrected misstatements are there, are they material or not? This is the basic thing that you are required to do. Okay, sir. Exercise professional judgment when you are doing this. When it comes to written representation, the same points we have covered earlier many times, same things just for your reading and understanding. Written representation about the financial statement, they are prepared as per the FRF. Internal controls are properly designed to make sure financial statements are free from material misstatement. Then written representation about few essays, 240, 250, 450. Come on, 240, 250, mixing both of them, I get 450. So 240, 250, 450 and your 560. Done, 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 done. Then we discussed about auditor's responsibility for accompanying information. What is the feel of this topic? Essay 720. That is your annual report. Whenever you get the other information, that is the annual report. Am I required to audit it? No, sir. You are just required to read it. Just read it to see whether there is any material inconsistency. Whether there is any material inconsistency between the financial information and annual report. If there is a material inconsistency, that means material misstatement can be in the financial statement or it can be in the annual report. Yes, sir. If the material misstatement is in financial statement and the amendment is necessary, but the management says, no, we are not going to do the amendment, modify your report. Then modify your review report. Okay, sir. If the material misstatement is in other information and again the management refuses, do you modify your report? No, sir. In your review report, describe the misstatement. Describe the material inconsistency. Sometimes you can also consider withholding the report, or the third thing is withdraw. So describe the material inconsistency, withhold your report, or in the last case, you can also considering the withdrawal from engagement. Now, what is the example of material inconsistency we discussed? Let's say there is a loss-making entity called Paytm. Now this loss-making entity in the P&L, you can directly see it is making a loss. But in the annual report, they have added a figure of adjusted EBITDA. What is the adjusted EBITDA? Earnings before interest, tax, depreciation and amortization. This is called an alternate measure of earning. Now this is showing the company is having operational profits. Is it something which is contradictory? Financial statements are saying loss. Annual report is saying profit. Should they show some reconciliation or not? Tell the answer from your heart. Should they show some reconciliation between the financial statement and annual report figure? Yes, sir. If they are not showing this reconciliation, they are bad. They are very, very bad. This is called a material inconsistency. Clear? Clear, sir. Now, sir, what if I found a material misstatement of fact? What to do? Again, in such case, Baba discuss with the management. Discuss with the management about this material misstatement. Also, if required, you can request the management to consult a third party. At the end of the day, if you feel the amendment is necessary and the management is not doing it, go to the TCWG. Go to the TCWG and also you can take a legal advice on this matter. Clear? Clear, sir. Then we discuss this communication wala part. It is just for your reading, nothing critical here. Then the written report, whatever information is there, again for your reading, nothing critical here. Then we discussed about the departure from applicable FRF. These points are same as your SA 705. If the impact is material and pervasive and you have evidence, adverse conclusion. If the impact is material but not pervasive, qualified conclusion. If you don't get the evidence, basically management is imposing a limitation on scope. First of all, so don't accept the engagement. But if you have accepted, and after acceptance, management is imposing a limitation on scope, withdraw. Then in that case, you should withdraw from the engagement. But if the withdrawal is not possible as per the law regulation, then disclaim your conclusion. Then you disclaim your conclusion. Now, many of you may say, sir, what if the impact is material but not pervasive? What if the impact is material but not pervasive? In that case, qualify your conclusion. Then in that case, you just need to qualify your conclusion. Going concern part, we have already covered. Now comes the last two topics. Sir, what were the last two topics? First topic said that in a particular document, interim financial statements are there. Plus, it is written that they have been reviewed. Now, the reviewer report is not given. Along with the financial information, reviewer's report is not given. Is it fine or not? Sir, it is not fine. In this case, you will not accept this thing as a reviewer. You will take a legal action. Got it, sir? Let's say as a reviewer, you gave a modified review report. Now with the financial information, they are not attaching the modified report. Is it fine? No, sir. Again, take a legal action. Again, take a legal action. Plus, consider the possibility of resigning from the audit of financial statement. Yani the review engagement is completed. But when it comes to the audit of financial statement, you will resign from this engagement. So legal action plus resigning from the audit of financial statement. Clear? Clear, sir. Then we discussed about condensed set of financial statement. In case of condensed set of financial statement, it is assumed that in case of listed entities, the condensed set of financial statements are accompanied by the full financial statements. Yani the full financial statements are available to the users. But what about other entities? In that case, is the latest financial statements available? The answer is no. Then in that case, you need to discuss with the management that the interim financial statement should include a statement that read these interim financial statement with the latest audited financial statement. If this statement is not included, it will be considered to be misleading and then modify your review report. That's all about it. That's all about SRE 2410. Clear, everyone? Clear, sir. Now let's discuss about question number 1. Take 2 minutes, read this question and tell me what will be the answer. Come on, go through this question once. Very good, very good, very good. Sajimi ji, Rahul ji. Everyone giving the right answer. Sir, EOM para. EOM para, EOM para, EOM para. So what the question says? During the review, you found that there is a major fire. It has affected the operations. ठीक है, sir. Substantial losses What it is indicating? Events or conditions affecting going concern. It has been disclosed. How will you deal? Basically, you want to draw the attention. You want to draw the attention. So as per SRE 2410, first of all, they have given the facts of the case. Okay, sir. Then it says that through inquiries or review procedures, you can get to know about a material uncertainty relating to event or condition that may cast significant doubt over entity's ability to continue as going concern. And wherever adequate disclosure is made, you will modify the report by adding a EOM para. So add a EOM para in the review report. Got it? Got it, sir. Now comes question number 2. It says what? While doing the review of quarterly financial information, you feel there is a material adjustment required for it to be prepared in all material respects as per the applicable FRF. This material adjustment is communicated. However, no response is received. What are the options available? Whenever material adjustment is required and it is not made, can I say there is a material misstatement? Come on. Can I say there is a material misstatement? Yes, sir. If there is a material misstatement and it is not corrected, what you can do? Sir, we can issue a qualified conclusion. We can give a adverse conclusion and we can give a disclaimer of conclusion. Or what we can do? Sir, we can withdraw. We can withdraw. Are these 2 points generally possible? Yes, sir. So these are the 2 points which are written. Modify your report. That means qualify, adverse or disclaimer of conclusion. Got it, sir. Or consider the possibility of withdrawing from this engagement. Which engagement? Review engagement. Acha, now when I am withdrawing from the review, am I the same person who is the auditor of the financial statements? Yes, sir. Yes, sir. You are not only reviewing the interim financial information. You, Mr. You are the auditor of financial statement. Should I resign from that engagement also? Come on. Please tell me, did you get my point or not? Yes, sir. So when you are withdrawing from the review, resign from the audit also. Resign from the audit also. So, and consider one more thing, possibility of resigning from the appointment of audit. Gotcha. Gotcha, gotcha, gotcha. Jaldi se batao. Are these 3 points clear? Yes or no? Done, sir. Gotcha. That's all for today. That's all for right now. Thanks a lot for being so participative, for being so energetic throughout the session. This SRE is something which I feel, once you look at it prima facie, it may appear to be a very big chapter. But if you look at it from my lens, it is nothing. Just 4 or 5 concepts which need to be learned. Other things just need to be understood, which we have done very well. So always remember, before you fear about starting something, about doing something, the expert was also once a beginner. How does a beginner turns into an expert? The simple answer is hard work, which you people are doing for yourself. So thanks a lot. Thanks a lot, everyone.